Sorry you're having some technical difficulty, but now we are about to start. So, without further ado, here is our video.
Welcome to Lesson 3, Understanding Precious Metals. We discussed the Goots model, which consists of 4 core financial buckets and a category we will call Other. As a part of the Goots model, we will now discuss one of the more critical components of Goots, that being physical, tangible gold and silver, bullion only. Let's get some background here on this. I personally began investing in physical, tangible precious metals since 2001, just after the 9/11 issue. I also worked for many years with a double PhD economist, a precious metals expert, where I became over time a well-educated investor in the shiny metal. During these years of my consulting firm back in the day between 2008 and 2023, I consulted and helped direct to my resource network relationships probably over $300–400 million collectively from the individuals throughout the United States into both gold and silver while working with a double PhD precious metals expert. What you need to know, and this is very, very important, and that is that all precious metals are not created equal, and the same goes for the firms that sell these. What I'm about to say in this lesson is very, very important. Let's begin with the metals themselves, then move on to the firms. So again, buy gold, buy silver, buy now, but buyer beware. Bullion. What is bullion? People often think it's a bar. Well, bullion can be either a bar or a coin, either gold or silver. It is typically 99.99% pure gold or pure silver and is known as modern day issue. It is not a collectible. Incidentally, bullion is all I personally purchase. I'll explain why in a moment. Oh, and it's important to note that only bullion is permitted in IRAs per the IRS. And I'll get into IRAs in gold and silver a little bit later. Let's discuss semi-numismatic. Semi means partial. Numismatic, for all intents and purposes here, means rare. Semi-numismatic or partially rare coins. These are coins, both gold or silver, and are typically graded by a numismatist. These are graded coins minted pre-1933, so there is a limited supply. They are typically hologram sealed in plastic with what is known as an MS, M like Mary, S like Sam, an MS grading. M stands for mint, state, the purity of the coin. For example, is it scratched or aged, worn, etc. The number that follows, the MS, determines its rarity or how many are in circulation, helping to determine its price point based on supply and demand, of which there is supply and little demand. Thus, my not so subtle point. For example, you may have purchased an MS-64 1-ounce gold coin, which is somewhat common in this market. Or perhaps you may have purchased an MS-70, which is a very rare coin, which may sell for hypothetically millions of dollars and perhaps be featured in the Smithsonian or something. While most semi-numismatics are ranging from, say, MS-62 to maybe an MS-65 or 6, these are less rare, thus less expensive. Here's the problem, and a very important takeaway for you. Semi-numismatics versus bullion. You should know that if you acquire, say, a 1-ounce semi-numismatic gold or silver coin, it will be significantly marked up due to its MS and rarity that we just learned about. Significantly marked up in a cost to you. As I have come to understand over time, there used to be a tradable market for such coins, and that extra premium that you may have paid up front above spot price, which could be 15, 30, even 80%. That's right. That is the markup, sometimes more. I've seen paid invoices from some firms, as I mentioned, few, but as high as 80%. But you can very easily typically expect a 15 to 30% markup. Could even be higher. Higher. Could this markup be recuperated as a multiplier when you recoup that markup and then some? Can that be done? From what I see, there used to be a market for that. In other words, like collectibles, people used to collect rare stamps and it was worth something, collect rare coins. And at a certain time, there was a market for it. People would buy it because they're collectors and they're rarity. So you would recuperate that cost by having sort of a double play, the movement of the gold value going up based on spot price plus the rarity. Those times and those days are long gone. Times have changed. You don't see a lot of profit being made in collecting postage stamps these days, do you? Same here with these semi-numismatics, in my opinion. Say no to semi-numismatics if you want to buy the pure gold and silver 99.99% as a hedge against inflation. It's the same here, in my opinion, with the semi-numismatic gold and silver coins. All you are doing is overpaying by far above spot price, plus commissions that will more than likely never recoup. All you are doing is unloading inventory from a precious metals dealer, and sometimes they will not even buy it back. Why? Because they have to make a market for it. They have to find somebody else who will buy it. Sometimes they can't, because a market must be made for it. And as I just stated, there really is no market for collectible coins as such today. Times changed. There once was, but that may have been 20 plus years ago, certainly 30 years ago. So why do metals dealers sell these? Well, that's an easy one. Some people like collectibles. Well, good. Sell a collectible, do your homework, shop around, get some collectibles, pass them on as an heirloom. What's the other reason they sell them? Commission. The commissions are significantly higher. I can name the firms. I won't, not here. But I'll get into this in greater detail a bit further on. But in short, they win, you lose. Now, that's not to say, again, if you're a well-educated collectible coin investor who looks for rare and unique opportunities to be on the right side of this type of trade, one may be able down the line to make a profit on the very high-end stuff, but chances are still not very good. It is very rare these days, I really must say that. So most investors are looking for an inflation hedge and a currency debasement hedge. This is my focus in the Goots model. These are the types of metals you want. Bullion. Let's talk about other metals. Metals experts and analysts, they often shy away from platinum and palladium. You don't hear that talked about too much. Platinum and palladium, and for good reason. First off, look at the growth of these metals as compared to both gold and silver over the past 5, 10, or 20 years. This may be an indicator as well. But most of the production comes from Russia and South Africa in platinum and palladium. Tariffs on BRICS nations should ensure that people will not recover anytime soon from these tariffs impacted prices. That only comes on the purchase side. Another type of precious metals you don't hear too much about, and for good reason these days, used to be good, are European fractionals. These are smaller coins, less than 1 ounce, once in circulation many years ago. So smaller coins, smaller denominated, that were in circulation as a currency many years ago, such as Dutch guilders or French francs, for example, thus European fractionals, often used back in the day due to less than 1 ounce per coin for those with little to invest. If you don't have a lot of money, you can buy a fractional, and or for barter, because they're smaller denominations, easier as a bartering tool. Fractionals are very hard to come by these days and is really not a focus of the Goots model. Junk silver, yet another tangible metal to have a conversation about. In short, these are quarters and dimes pre-1965, when they were produced with 90% pure silver back in the day. Today, this is not the case. If you took a quarter or a dime pre-65 and dropped it on a table and listened to the sound of that metal, it'll ping back to you. Why? 90% silver. Drop, ping. You will not have the same sound if you drop a modern day issue, a post-1965 quarter or dime, due to the lack of actual silver. It's got a lot of other filler in it. And so a pre-1965 quarter or dime, based upon the current spot price of silver, which at the time of this recording is just under $50 an ounce. So with that being the case, a quarter or a dime pre-65, due to the weight of the silver and the high price point of silver today, is a whole different situation. These are typically sold, these junk silver, in large full bags only, and is great for barter, if a barter situation comes to be, because it's small, recognizable, because it's a US quarter and dime pre-65, it's worth more than its face value. Not so easy to find these days, cumbersome to store, but a part of the precious metals bullion construct. I, for one, invest in both gold and silver bullion only bars and or coins. 1 ounce coins or varying weights in bars. Simple. End of story. Bullion. Silver, gold, coin, bar. Now let's talk about paper versus tangible. I mentioned this in an earlier lesson and I touch on it. Well, here we are. Brokerage firms are prohibited from selling tangible gold and silver. They're not a depository and they're not a precious metals dealer. Brokerage firms are prohibited from selling tangible gold and silver. Some may, but the storage can be problematic where you lose control. Let me elaborate on this, and I can go over this with you personally if we have a consult. You'll want to stay away from the paper proxy for a lot of different reasons, and we'll get to that. These firms, all of them, you know, the Wall Street Club of Corruption, do not sell tangible assets like real estate, for example. In fact, if it is discovered that if a broker sold physical tangible gold and silver, it is known as selling away. It's a term in the industry. And a broker's OSJ, or Officer of Supervisory Jurisdiction, may fine the broker, they always do, or get a lifelong ding on their financial advisor report, which they will, and may very well be terminated, as often happens. You see, the Wall Street Club and the banks, they want all the money, all the market share. So in their infinite wisdom, they devise paper proxies that hold real estate, as in REITs or real estate investment trusts, for example, as they do the same with gold and silver. Precious metals in their paper world are packaged up in a mutual fund or individual stock shares or mining companies, ETFs, etc. Again, just another paper proxy. If you are looking for liquidity, low-cost acquisition, and no-cost liquidation, we'll get to that later, and as a hedge against inflation, owning the physical gold and silver is best, especially right here, right now. I'll share a story with you. I recall back in 2008 and 9, you may remember the orchestrated global market collapse, where debt and wealth was simply shuffled around to suit Wall Street and the banksters and to meet the needs of the deep state's funding agenda. Gold went then to an all-time high of 2,000 an ounce. By the way, today it's approaching 5,000 and got a long way to go. But anyway, back then, gold went to its all-time high of 2,000 an ounce, and silver back in 0809 to an all-time high of $50 an ounce. Meanwhile, the majority of the paper proxies at such time were defaulting and collapsing and coming down in value. Droves of investors flooded into my calendar to make sense of this painful lesson we can all learn from today and moving forward. So say no to the paper proxy, especially now. I could go over this in greater detail if you choose to access me in a private wealth coach consult. We'll discuss it a little bit more later as well. So gold or silver, let's go there for a moment. While both gold and silver in some respects go up or down for the same reason, because they're both financial metal instruments. By the way, silver was just happened a week ago. Silver has been registered now on the I should have had it written down, rare minerals listing in addition to the precious metals. So anyway, both gold and silver go up for the same reason. in part being both financial metals. Silver, though, being an industrial metal as well as a financial metal, responds up or down for other reasons as well, manufacturing. While some metals professionals lean more towards gold, some more towards silver, I, as an investor, typically maintain a 50-50 balance, basically, of the two, and this strategy has served me well for nearly 3 decades. Let's change subjects within this realm of precious metals, tangible, and talk about IRAs. There's trillions of dollars invested in qualified money, 401ks, 403bs, TSAs, simple SEPs, IRAs, etc. Now, the IRS has many rules, as you may well be aware, about 100,000 ever-changing pages each year. And yes, President Trump has been discussing the elimination of the IRS, certainly a massive overhaul already underway to the tax code. But we must work with present-day rules. When these rules are gone, well, we'll know what to do at that time. The IRS only allows, here's the rule today, only allows bullion inside the IRA. So, for example, if you're rolling over your paper IRA in stocks, bonds, or wherever it may be, because you want to be in the right asset class at the right time, like gold and silver, that can easily be done with the right firm, with the right asset transfers team. We'll talk about that later. But the IRS will only allow you to have it in bullion, bars or coins, gold and silver. So the IRS only allows bullion in the IRA. Semi-numismatics that we just learned about are forbidden. Why? Well, it's pretty simple, because of its unknown, variable, unquantified value. So why invest in it in the first place, just as a sidebar? But anyway, now before you begin repositioning your IRA into one of the buckets of the Goots model, that being gold and silver, you are highly cautioned to only work with professionals before liquidating your IRA, 401k, 403b, TSA, etc. I'm going to lump it all together as IRA. Before liquidating the IRA assets to proceed into gold and silver, as there can be irreversible tax consequences, barriers and blockage thrown up by administrators of 401ks and by advisors and firms, because it's a tug of war for your money. So again, caution, don't do it on your own. There could be irreversible tax consequences, penalties, and/or fees if not handled correctly. The professionals within my resource network can assist you with this. I do want to mention briefly here, if you have an IRA, a SEP, a simple, a 401k, 403b, any tax qualified retirement account, most all, but again, very carefully, as there are many pitfalls in the portability when liquidating and/or rolling these accounts over, most all of these accounts can be properly rolled out of their structure into a self-directed precious metals IRA when done correctly. Again, there is much to know about the subject of gold and silver into IRAs, and I'll bring clarity to this when you access me as a personal wealth coach, or in the group coaching. I can address things a little more granularly than here, and certainly specific to you in a private consult. Let's talk about storage. We're talking about a physical asset, something tangible, something real. Remember, God's money. You know, I remember him telling his disciples, he said, we have found all this gold. What should I do with it? So excited. And Jesus said, give it to the poor. I don't know. So why I'm relating that is it's a tangible. It's got to go somewhere. So storage. For non-IRA or non-qualified assets, you can take delivery of the gold and silver and store it yourself in the non-IRA. People often purchase and bolt a safe to the floor in a closet or a garage at home. Some store it in their gun safe or their garage or in their barn, depending where you are. The list of home storage options is nearly endless. You can get very creative. You can store it in a bank deposit box. I pause there because I, for one, am uncomfortable with this in banks, as they're over there in enemy territory, the central banks. Used to be okay. I used to have some of my metals there. Not any longer, but it's an option. Now, the other option is at a depository, one with $1 billion of liability insurance from Lloyd's of London, for example. These private depositories, not federal government, these depositories store sovereign wealth funds for governments and institutions, as well by and large for individuals like you and I. There is a small fee for such storage. So if you pay, don't quote me on the fees, are going to vary on how much you have in there and which depository, but 0.5% up to 1%. But if you're making, 40, 50, 60%, it's okay for me. These depositories I have found personally to be safe and useful. I use one to this very day. There are two I've worked with, one in Texas and one in Delaware. Well, actually, a third years ago, a depository in Hong Kong. An important note to put this into perspective for you is $100,000 of silver may fit in five-gallon pails. Very heavy, very cumbersome. Whereas $100,000 of gold will easily fit with room to spare in a shoebox. Oftentimes, people, depending on various factors, will store their silver at the depository and their gold at home, and it makes all the sense in the world. That is what I do. Now, storage for IRAs is quite different. You're not permitted per the IRS to store your bullion, gold, and or silver at home if it's in an IRA. The metals must be stored in a depository, and your metals dealer must have a valid third-party reporting custodian so that the December 31st value of what your IRA is in metals can be reported to the IRS, as all IRAs are required to do, regardless of the investment class. I know this sounds a lot and overwhelming and stacking on stuff. This is why I say don't go there alone. Bring aboard the experts and I can refer you to them, the folks I do business with. All IRS rules still apply to the metals in the IRA in terms of your mandatory distributions. It used to be age 70 and a half when mandatory distributions. I think with the COVID mess, they extended it to, I believe it was 73. You can look it up by going to Google and put in RMD, or required minimum distribution chart. I think it begins at age 73 today. But basically, all the rules still apply, those distribution rules, regardless of the fact that it's in gold and silver. It's still in the category of qualified or IRA money. So required minimum distributions need to be met. But now you have a choice of where you would like to take these RMDs from in the event you have other IRAs outside of your metals. Also, you can take your metals IRA required minimum distributions in cash. So in other words, if you roll, let's say you have a few IRAs, or even just the gold and silver, and you look at which is the best one of these for me to take my distribution from. Maybe you're required to take $9,000 that year. Well, you have a choice. Which should I take it from the stock and bond if you're still in there? The annuity? Should I take it from my gold and silver, my gold or silver? So you look at all the different ways these financial instruments are constructed, how they are performing, public policy, where we're at in the environment, and then you make your decision where the best asset is to pull it from. But here's something very unique and only unique to gold and silver IRAs. You can take it in kind. So in other words, if you don't need the income, some folks don't need the income, but they're required to take it. So let's say you take it, you could tell your metals contact, hey, don't send me my $9,000 in a bank wire like you normally do for clients. Send me the equal value of $9,000 in gold or in silver. Ship it to me, and I'll just store it at home. You can do that. You have options. Okay, so that's interesting to know. All right, precious metals dealers. They're not all created equal as well. As discussed at the beginning of these masterclass series, not all precious metals deals are the same. Precious metals, for all intents and purposes, are a relatively unregulated industry. I see this changing. In fact, I know it's changing in the future. While I am not a fan of prohibitive regulation that does not serve the public interest, some regulations, of course, is wise. Otherwise, it's wildlife on the prairie between the cowboys and the Indians. Okay, so allow me now to bullet point just some of the factors that you should be concerned about. Here are some of the questions you should ask of the firm you're considering partnering with and trusting with your hard-earned precious metals assets. 1, is this a one-time transactional purchase, or will it have an ongoing consultative relationship? 2, since there's no regulation, all you got to look at is the Better Business Bureau's ratings. You might as well have a look. Number three, do they have, pardon me, a turnkey IRA program with an accepted and approved high-quality third-party custodian? Do they truly, number four, understand the reset transition we are in? Are they of like mind? How are commissions structured? This is very important. What are you paying on the upfront? And are you paying on the back end as well? Some firms, most firms will double dip you. You don't want that. You only want to pay when you're acquiring the metal. Are they following and do they understand President Trump's policies? All things economic related. There is much more. So we'll get into commissions. We'll delve into this now. Commissions. Physical metals are like other tangible assets, like real estate. For example, when a home is listed on the market, a broker charges a fee for his or her expertise in helping you in the transaction. Same applies with tangible gold and silver. There is a commission for the purchase. Some charge on the front end and charge on the back end, meaning you are charged a commission when you purchase. No way of avoiding that. But some will charge when you liquidate. Commission amounts vary from firm to firm. You simply want a competitive and transparent fee structure before engaging. You always want the best bang for your buck, right? And if someone tells you they sell it at below spot price or at no commissions, please do run for the hills. Deception can be very costly, and I can go over that when we meet. So why gold? And you don't want to sell on the back end. I mean, it's pretty simple. If you put $100,000 into gold and silver and it's grown to $300,000 and you liquidate it now, you're going to pay a commission on the back end on the full $300,000 value. Some charge up to 4%, some less, some more. You want a clean exit strategy. No one ever visits the exit strategies of investments. That's one of the traps. So you want to work with the very few firms that I know of two, and I've worked with both of them personally, that do not charge a commission for the exit strategy. But let's change the subject now. Why gold? Why silver? Why now? Well, the battle of resets of not only the currency, but banking and the entire global financial system, as we discussed, is well underway. Precious metals acts as a hedge against inflation and currency debasement. Very simple. It responds well as a flight to safety during political, geopolitical, social, and economic uncertainties. Bullion, both gold and silver, are also liquid, meaning there's always a market all over the world for the metal, unlike the semi-numismatics previously discussed. Buy gold, buy silver, buy now, but for the reasons you've been learning about here, buyer beware. There is much to know beyond what I've even covered here in this lesson. So I do look forward to the group coaching that I'll be holding 2 sessions for, and private one-on-one wealth coach is of the most value, clearly, because it's private, specific to you. So, urgent alert. Federal Reserve's economic warfare on American patriots is exposed. How Trump's economic revolution is battling the unelected elite to save your wealth. The Fed's systemic steal is happening right now. President Trump has been quoted saying that Jerome Too Late Powell, I call him Jerome Too Little Too Late Powell, has done it again. He's too late and actually too angry, too stupid, and too political to have the job of Fed chair. This is President Trump saying this. He also says he is costing Jerome Powell, our country, trillions of dollars, in addition to one of the most incompetent or corrupt renovations of a building and buildings in historic construction. So at the time of this recording, the drums are beating louder and louder. The Fed chairman, Jerome Powell, that Trump just commented on here, I read to you, will soon be replaced. And so the financial apocalypse we've been warning about is no longer on the horizon, it's at the doorstep. The Federal Reserve's alliance with financial elites is launching their final assault on your financial freedom. But there is hope. President Trump and the true American patriots are leading the charge against this systemic steal and protect your wealth, to protect your wealth and restore this great nation's economic sovereignty. The digital dollar deception, your money, their control. In a shocking move, the Federal Reserve has accelerated plans to launch the central bank digital currency we've been talking about, the CBDC, by 2026, a breath away from this lesson. This isn't just a new form of money. It's a weapon of mass financial destruction aimed at the heart of American liberty. Remember, they want to bring America to its knees, Agenda 21, Agenda 2030. It's all hidden in plain sight now. With a digital dollar, every transaction you make will be tracked, traced, and controlled by unelected bureaucrats with 14-year terms and their AI algorithms. The monetary manipulation. The shocking evidence has exposed the sinister coordination between the Federal Reserve and the financial elites to push this digital currency agenda. They want to eliminate cash, erase your financial privacy, and give themselves the power to turn off your money with the flip of a switch. Trump's trade wars. Let's talk about that. The hidden attack on American families. The Federal Reserve's stubborn refusal to lower rates, certainly at the rate and speed that they should and at the level that they should, has created crushing burdens on you and me, the homeowners, small businesses, and working Americans. Mortgage payments have nearly doubled while the Fed renovates its headquarters to the tune of $2.5 billion, exposed by President Trump. This deliberate policy is transferring wealth from everyday Americans to financial elites. That's what it's doing. The mainstream media won't tell you this ever, but these monetary policies are part of a systemic wealth extraction scheme. By manipulating the monetary system, they're setting the stage for an unprecedented economic crisis at the doorstep. But only those who are prepared will survive the storm. This isn't fear. This is putting confidence in you to take action because you can survive and thrive the transition of this global financial reset. The name of the masterclass. So protect your family when? Right now. The battle for America's financial future is raging, and your security hangs in the balance. Will you stand idly by as the gold reset threatens to strip away your hard-earned wealth? The Genesis Gold Group, which I work with, is a partner in this fight. We're not just protecting wealth here, we're preserving the American way of life for generations to come. So as we conclude this module, this discussion, this very lesson, some of the key takeaways are very simple, but very clear and very important. Key antidote: acquire precious metals right now with the right metals at the right price, with the right consulting, with the right firm. I can help direct you to my resource network for expert VIP fast track service via a free consultation with the very best in the business. Gentleman's name, I'll put it out there for you right now in case you just want to spring into action immediately, is Bill Armour, Genesis Gold. You can visit jmcgenesismetals.com. Learn more, read more, schedule a free consult, mention my name, you will be fast-tracked. Bill Armour, briefly, served in the U.S. Army Reserves, military and intelligence, I think for nearly 10 years. Also, a graduate of the Azusa Pacific University in Biblical Studies. Mention my name, give Bill a call. That's the conclusion of this lesson here. We'll see you over there in the next lesson.